November's real estate market numbers are out. And you own a home in Toronto, or you're thinking about buying one, you need to hear this. Because the biggest story in November 2025 market isn't prices or interest rates or sales. It's something hidden, but it's quietly reshaping the entire market heading into 2026. And if you miss it, you could price your home wrong, buy the wrong property, or make a move that costs you tens of thousands of dollars. Stay tuned to the end where I'll provide buyers with 5 things to do and sellers with 3 action items. I'll break down what's happening, what it means for buyers and sellers, and the one move you need to make before next year. Let's take a look at the numbers, starting at the overall GTA market. Okay, let's take a look at the map of the Greater Toronto area, which includes all the statistics on a monthly basis. As you can see in the middle there, the red portion is the city of Toronto, and then the surrounding areas are included into the stats that are produced on a monthly basis. So you can see it varies because it covers a very wide area from Clarington to the east, Burlington to the west, all the way up to Innisfil and Georgina in the north. So in November 2025 compared to November 2024, you can see sales were down compared to last year, November, by 15.8%, around the 5,000 mark. The number of new listings dropped by 4%. This is anticipated because as we get closer to year end and the holiday, less people list their new homes on the market. They'll probably wait into January and February and maybe the spring market. With respect to active listings, that's just reflected based on the fact that homes and properties are taking longer to sell, which is directly tied into the very bottom where you can see the average PDOM, which is the average property days on market, went up from 48 days to 56 days for this November 2025. And you can see there also the average price dropped from 1.1 to 1039. The reason is, again, because it covers such a large geographic area. And again, real estate is very local because if you're buying in Toronto and even within the city, depending on the pockets, the price point, it varies very differently compared to if you're looking to buy King City, Burlington, Oshawa. So it's really not the best indicator of the overall market health. However, it's a number that is widely reported in the media on a monthly basis. Okay, so here's data that I compile on a regular basis for the city of Toronto. So this is the 416 only. And I break it up into 3 sections. You have detached, then we have semi-detached on the next following page, and then it's followed by the condos in the 416. So we'll start at the detached. A few things that I take a look at are sales. And again, this is for this year, 2025. Active listings, so the number of properties on the market for sale at the end of that month. Months of inventory, which is an indicator of the market position, whether it's a seller's balanced or buyer's territory. So this is the number of listings. In this case, 1450 divided by 351 gives you 4.13 months. So it'll take, if no new supply comes in, it will take 4 and change months for all that to be absorbed and sold completely. So anything under 4 is seller's territory, 4 to 6 is balanced. And then once you go over 6 months of inventory, the market's skewed towards the buyer's advantage when it comes to negotiations. Then you get into the average price and median. Now, the reason I track median, I know in the media, a lot of the average price numbers are reported and other people in the industry, because it depends on the price, home, especially detached, the house prices that are sold. So if more luxury homes, detached houses are sold in the 3, 4, 5 million, it will pull the average up. However, if detached houses that are 1.2, 1.5, depending on the pockets, are sold, that would bring the average down. So a median is a good indicator of where the market is at. And the last row there that I track is the Bank of Canada. And I want to see if there's a correlation with the Bank of Canada cuts towards the real estate market. Obviously, the bond market drives the fixed rates because the Bank of Canada directly impacts variable mortgages lines of credit, but not the bond market, which dictates the fixed mortgage rates. If we look at the detached, November numbers went down compared to October. However, it increased significantly from earlier in the year. And if you recall, it's been a turbulent because earlier in the year, with the new US presidency came in, there was all those tariff talks. There were a couple of Bank of Canada cuts to stimulate the economy. And then things picked up in April, May, June, and surprisingly even July. And then things have been cooling off as we get into the year end. However, it's been steady. We've had 675 sales September, 747 October. It's dropped in November. And again, that is anticipated because November things do get slower, and then it gets significantly slower as we get into December. So a couple of things to point out. We have 4.27 for the months of inventory for the detached houses in Toronto. Very balanced. So neither buyers or sellers are happy. It's equal. And you can see there the average price is 1,541 with the median at 1.2. Now, this number is about $154,000 lower compared to November 2024. So over 12 months, that's $12,000 decrease on a monthly basis for the last 12 months. So if someone bought in November 2025, then the average price is down by 12,800 and change on a monthly basis. However, it's almost irrelevant. And the reason I say that, there are two data points that matter, is when you buy and when you sell. What happens in between is almost irrelevant because that is more psychological than something actual, because at the end of the day, we're not buying, or I should say trading homes on a daily, weekly, monthly basis. People buy homes, live in them for 5 years, 7 years, and then sell. So it matters when you buy, matters when you sell, and the equity that you've built into that property. Now, with respect to the semi-detached properties in the city of Toronto, you can see the sales numbers are less, and this is strictly just because there are less semi-detached properties in the city of Toronto. So the numbers are lower when you compare them to the detached properties. The sales did go down in November. However, if you look at the months of inventory, it's in seller's territory, 2.39. So they're the more affordable option for someone or a young family or a couple moving from the condo market who wants to live in the city and wants a ground level freehold lifestyle. The semi-detached is the more quote unquote affordable option, with the average price at 1,187 and a median price of just over $1 million at $1,050,000. I tracked the Bank of Canada benchmark rate cuts and wanted to see if there is any impact. But really, we've had 9 cuts since the peak of July of 2023. And at this point, another cut, I don't believe will make a difference. It's really the economic uncertainty because of the trade negotiations or the lack of trade negotiations down south, and the upcoming USMCA NAFTA 2.0 negotiations in 2026. That will be the driver of the real estate market and the economy in general moving into 2026. Last but not least, the condo market, which is the large chunk with respect to activity. You can see there we had 1,072 sales in October, 880 in November. The months of inventory is now back up to 6 months. And you can see we started in January at 6 months, just over 6 months, and we're back to the same point. It's just over 6 months. So really hasn't moved much. There is downward pressure on prices because of record completions of new projects to the market in 2025 and the last batch coming in 2026. And then pretty much after that, there's nothing coming to the market, which will create upward price pressure down the line. It could be 2 years, could be 3 years, but down the line, just because there's a lack of new supply, new construction for the past year or two, that will create an issue down the line. And again, it could be 2 to 3 years from now, but it will definitely not be next year with respect to prices going up. So you can see there, the average price in January was $691. We're at $701, so pretty close. And then the median dropped from $610 to $580. So there is downward pressure. I believe prices will continue to go down moving into 2026. And then things will turn around once the supply of all the newly completed condos is absorbed, and whatever is being resold on the market is absorbed by buyers moving forward, then prices will stabilize and then prices will go up. So again, that could be a couple years down the line from today. Here's the truth about November's 2025 numbers. If you're thinking or selling in 2026, reach out. I'll walk you through the numbers, build you a plan, and show you exactly how to navigate this market the smart way. I'm currently working with a few clients who are looking to sell their current home and move up in the spring of next year. The work has begun now. As always, if you have any questions, reach out via the link below. I hope you've enjoyed this video, and I'll see you in the next one.